This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January the 5th, 2017. Our time is 8:39 Mountain. Our radio show runs normally Sunday afternoon, 3 until 4 on 630 CHED. Today, we are on prior to the face-off show, Oilers and Senators. We're on 2:30 to 3:30, face-off show for the Oiler game at 3:30. Don't forget, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. They're streaming there for you 24/7. We have a podcast. We're on YouTube. Can't forget about TuneIn. And 630 CHED is a part of Apple Music. If you have Apple Music, 630 CHED is streaming on Apple Music. We're on a lot of different platforms. You definitely will always hear our radio show. Connect with Harold, 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a 1.21 carat cushion cut fancy green diamond. It is a beautiful diamond ring. We'll talk more about diamonds and that ring in the second half of the show. As we start today's program, the U.S. dollar has had some major up days since Donald Trump has been elected as president-elect, and he's going to be sworn in here very soon. The greenback, though, posted its biggest drop since his election, a lot of it over the Fed minutes. Last month, the Fed raised interest rates in the United States a quarter point to 0.75, and they actually mentioned in the minutes that they're concerned about the impact of the pace of interest rate hikes based on Trump's policies. Well, the truth of the matter is, Harold, most countries don't want a strong currency because it means the import-export situation is obviously at peril. The United States, though, they raise interest rates as promised 3 times or maybe 4 times this year. It doesn't matter what happens, the U.S. dollar is going to go up because you just have a scenario where people will move into the dollar for the spread when it comes to making money on, obviously, interest on their money. And in 2017, as has been predicted by you, we will see the U.S. dollar much stronger. In fact, last week we had Macquarie coming out saying Canadian dollar 65 cents against the U.S. dollar in 2017. They raise interest rates in the United States. The U.S. dollar is going up. Harold, there's just no getting around it.
You better believe it. And again, it's a trend that started many years ago, and we were right on top of that. And it's a trend that we're going to continue to run because it's nowhere near the end. So, as we've always said, the U.S. is the only country right now in the world that can raise interest rates. They raised it at the end of the year. We're going to say 3 or 4 more in 2017. The fact is that a strong U.S. dollar is actually very good for the economy because it's bringing in so much foreign money. You know, the thing is, before the elections, there was so much uncertainty that all the big money was on the sidelines. The big money was out of the stock markets, and everybody was so concerned about what was going to happen with the elections. Once the elections were over and they started to be more comfortable with Trump, the fact is that all the money started rushing back into the market, which is why the Dow is trading almost at 20,000. It's going to break above 20,000 and continue because, again, pretty well every other country in the world is in financial trouble. Not that the U.S. is in great shape. They're not, but they're a lot better off than every other country. And the fact is because the economy is so strong or is stronger in the United States than any place else, especially Europe, the fact is that the only place that they feel comfortable putting their money is into the U.S. markets. The other situation is that for my company, seeing the trend that was happening in the U.S. dollar, it was a matter for me to try to get my Canadian clients out of a bad situation in Canadian dollars and get them into U.S.-based investments with my company in private investments, and that's worked out to be probably the best thing that we've ever done. Our clients are making over 25% a year on the investments, and they're making it in U.S. dollars. And if we're correct on this call on the U.S. dollar, which I'm positive that we are, what we are going to see is the Canadian dollar is going to fall to about the 180 level, and against U.S. dollar, what that basically is going to mean is that it's going to cost you 1,800 Canadian to buy 1,000 American. Now, some people only look at it saying, well, if that's the exchange rate, I won't be traveling to the United States, but we're missing the boat here, because the fact is that that's a huge spread, and we could make a fortune of money on that. So what we need to do is get out of Canadian-based investments at this point and get them into safe U.S.-based investments that are paying high returns in U.S. dollars. Now, again, if you're looking for that in the stock market or commodity markets, that's not something that I'm ever going to recommend to you. 90% of the people that trade stocks lose their money. Why in the world would I want my clients and friends in that type of market? The other scenario is interest rates. With interest rates at 0.5% in Canada and in Europe and soon going negative, meaning that when you put your money in the bank, you're going to have to pay the bank to keep your money for you. How ridiculous is that? But that's the state that we're at right now. That's actually happening in Europe as we speak, and will soon be in North America. And there's no doubt in my mind that there will be negative interest rates in Canada. That means, where do you put your money? Just look at this as something that's extremely concerning and suspicious. A few months ago, the Canadian government actually approved a bill called C-15, which means that the Canadian banks that are owned by the Canadian government will not be bailed out in the case of a financial issue. So when Randy and I looked at that scenario and Bill C-15, and we started to analyze it, the only thing that we could come up with, and was very concerning, is that the U.S. government knows that there's a chance that the Canadian government knows that there's a very good chance that the banks are going to get into trouble. With the real estate market the way it is, with oil prices the way they are, with unemployment the way it is in Canada at this particular point, there's issues there. So the fact is that C-15 says that the Canadian government will not bail out the banks if they go under. And what that basically means is that if you have more than $100,000 sitting in a Canadian bank and that bank gets into trouble, they're going to consider you a creditor. They're going to take your money and pay off the debts of the bank. I know it sounds ludicrous, but this is something that the Canadian government has actually approved several months ago. Most people don't know about it because it was sort of hidden in this C-15 bill. If you're confused, if you're worried, if you don't know what to do, by all means give me a call. I'll explain it to you and what your options are. But the fact is that you don't want to keep your money in the bank because the bank is not paying any interest. And when you calculate the fact that what inflation is and what your taxes are, you're literally losing money by keeping your money in the bank. The only reason to keep your money in the bank at this point is to pay bills. Your money aside from that should be elsewhere. And to put it into the Canadian stock market at this point is not a smart idea either, because again, if you're not an experienced trader, you're going to lose your money like 90% of the people do. You need to get out of conventional investments and look at the alternative asset markets, and that's my business. That's what I've done for 35 years, and that's why my clients at this point are doing very well. We don't have financial issues at this time. Our clients are doing well. We're getting paid in U.S. dollars, and it's only going to get stronger and stronger because U.S. dollar will get stronger. Now it's the beginning of the year. It's the beginning of 2017. Gold today is up 1650, so we're trading at 1180. Some people are asking whether or not gold is reversed and is now going to make a run. No, gold is not going to make a run at this point, because unless we believe that the U.S. dollar is going to fall, which we do not believe, then there's no reason for gold to go up, aside from just basically profit-taking from people that went short, and the fact that the U.S. dollar fell at the beginning of the year on profit-taking. We're coming off a 14-year high, and this market is going to go substantially higher. So our recommendations are the same, in the sense that gold should drop to 1,050, silver should drop to around 1350 initially. If those prices are broken, gold could actually go back down to 850, 900, and silver could basically go below the $10 level. Again, that's going to happen gradually. It's not going to happen all at one swoop, but the fact is that with a strong U.S. dollar, there's no way that gold is going to sustain this rally. So again, at this point, Randy, I'm very comfortable with where we're sitting at this point. Recommendations are very clear. You want to be in U.S. dollar-based investments, but not speculate. Don't trade with leverage. If you're going to buy metals, I suggest that you wait a little while till gold bottoms out. Then we're going to be a massive buyer of gold. The fact is that as interest rates go higher and higher and the U.S. dollar goes higher, it should push gold further lower. But there are situations in the markets at this point, that are pointing that gold could reverse and make a very strong move on other situations aside from the U.S. dollar. It's not only the U.S. dollar that will make gold fall. There are other reasons why gold could rally. So I believe 2017 is going to be an amazing year for my company and for my clients that invest with us. If you're outside of that market, I predict that you are going to have issues. If you're going to stay in stocks or in retirement savings plans, you're going to continue to lose your money. 90% of the people do, so why would you be any different unless you're an expert trader, as most people are not? Don't get caught up in the hype. The fact is that the Dow is about to break 20,000. It's not that the Dow is doing that great. It's just that all this money from offshore is coming back into the market. All the people that sold out prior to the election think that they're missing something and are pouring into the stock market and soon to be the U.S. dollar. So, again, we've got a great opportunity to make an awful lot of money this year and get paid in U.S. dollars. You need to give me a call. Let me explain to you how we do that.
And if you listen to our radio show, have any questions, the number to call to speak personally and privately with Harold Siegel, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. 1-800-432-1022. Our featured diamond of the week is a 1.21 carat cushion cut fancy green diamond ring. It is a beauty. We'll talk about that ring in the second half of the show as well. We have some outstanding articles on the auction results for colored diamonds jewelry in 2016 for the entire year. Don't miss the second half of the show. We have some great information on colored diamonds and outstanding auction prices. Get our free weekly newsletter from Harold if you are not receiving it. It is a must-have. We send it out via email free of charge every week. If you'd like to receive it, speak with Harold, 1-800-432-1022. You can connect with us at rarecoloreddiamonds.com. You'll be on the same page we are. When we go through the radio show, you'll be reading the exact same material, seeing what we're seeing on a weekly basis. Some of the information we have from this week, interesting to note, a new study by economists from Harvard and Princeton indicates that 94% of the 10 million new jobs created by the Obama-era administration were temporary positions. You wonder why people were upset and elected Donald Trump. The study shows that the jobs were temporary, contract positions, or part-time gig jobs in a variety of fields. That from investing.com. You'll find that in our newsletter, 94% of the jobs temporary. In the United States as well, the federal debt climbed over $1 trillion in 2016. They started the year December 31, 2015, last business day, $18.9 trillion in debt. They finished December 30, 2016, final business day of 2016, $19.9 trillion in debt, almost $20 trillion. And that will be one of the big battles coming up with the House and the Senate in the United States, and obviously the new Trump administration. And that is coming up with some sort of balanced budget and debt ceiling. It's something that will be interesting to watch. The U.S. LIBOR breaks above 1% for the first time since 2009. The rate banks charge each other to borrow dollars for 3 months rose above 1% for the first time since May 2009, as global interest rates extended their climb on expectations of accelerating growth and inflation. That's why we're seeing rising interest rates in the United States, the U.S. dollar going up. The London Interbank Offer Rate, or LIBOR, for the 3 months dollar fix was 1.100511%, the highest level since 1.00688% on May 1, 2009, when it last topped 1%. So you're starting to see that, yes, interest rates are forcing the rate to go up for the LIBOR and in the United States on the 5-year and the 10-year. Federal officials, they came out, the Fed, and last month, as we talked about off the top of the show, they raised interest rates a quarter point. Well, they came out, and the minutes of their meeting were reflected yesterday in a story that we have in our free weekly newsletter. Fed officials endorsed gradual rate hikes as upswing risks debate. The Federal Reserve officials focused on the impact of potential fiscal stimulus during their December policy meeting, with many starting to worry that the central bank might eventually have to be forced to quicken the pace of interest rate increases to head off higher inflation. Almost all of the participants indicated that the upside risk for the forecast for economic growth had increased as a result of prospects for more expansion of fiscal policies in coming years. So, Harold, that says to me, and we have approximately 6 minutes left in our segment here, that says to me, depending on what happens here with the Trump administration, they may be raising rates more than 3 times in the United States, the Fed. That could even increase the dollar further and faster than we had expected.
There's no doubt about that, Randy. Again, I believe that the U.S. dollar is in a massive bull market. Once it broke above par and closed a couple days in a row above that, the trend was set. And there's nothing in the marketplace at this point except for lowering interest rates, which is not going to happen, that would cause the market to reverse. So, again, at this point, we've broken par. We've been above 103. We've closed twice above that. We're closing in on what the euro was trading at, which is 104. We always predicted that the U.S. would take over the euro currency, and that's going to happen this year. In actual fact, we're within 2 cents of that right now. So there's no doubt in my mind that the trend is set. U.S. dollar is going to go higher. No market goes straight up or straight down. There's always trading because of the futures markets and profit taking and things like that. But I don't look at the day-to-day. I look at what the market's going to do over the longer term. And again, my money is in the U.S. dollar. There's no doubt in my mind that we're in one of the massive bull markets, and my clients will make a fortune in this market.
You're listening to the World Financial Report on radio with Harold Siegel and me, Randy Marshall, and we are on today a little early from 2:30 to 3:30 instead of 3 to 4. The Oilers play the Senators, the face-off show coming up at 3:30 our time. And if you missed it last week, we had a story, and it bears repeating. The Canadian dollar could drop to 65 cents U.S. in 2017. Now, Macquarie forecasts higher interest rates in the United States, major factor that will drive the loonie down, the bank said. After a rough 2016, a currency prognosticator at a major investment bank says he expects more pain for the Canadian dollar next year, predicting a low of around 65 cents U.S. in the next 12 months. David Doyle of Macquarie Capital Markets Canada says two major factors are going to conspire to drag the loonie almost 10 cents lower than its current level of around 74 cents U.S. over the next year. Interest rates and the price of oil. The biggest factor in Doyle's analysis in the sudden divergence in monetary policy between Canada and the United States. In the United States, the Federal Reserve hiked its benchmark earlier, obviously last month, by a quarter point, and it signals that it's expecting to do so at least 3 more times this year. Now, the Bank of Canada, meanwhile, is saying loudly and clearly that it has no intention of following suit. Economists are expecting the bank to stay on the sidelines through 2017 at least. And it was just released yesterday. The Bank of Canada is going to purchase 1 billion worth of Canadian bonds. So here we go with quantitative easing in Canada. The Bank of Canada printing money, going out and buying bonds to the tune of 1 billion. So that's obviously very accommodating. And if any action comes of it, it will obviously make rates go lower, not higher. Divergence in monetary policy between the two countries obviously are closely tied, and it's very rare that we have a scenario that we find ourselves in today. Higher rates in the United States will drive up the value of the U.S. dollar versus everything. Couple that with lower rates in Canada, and you have a recipe for a cheaper loonie. The Bank of Canada, we think, either going to be on hold or even cut rates, Doyle said in an interview. Harold, 65-cent Canadian dollar in 2017.
Well, again, that's going to be a fiasco, but if you're prepared for it, you could literally make a lot of money on it. That's what we've done well in advance. It's not too late to get involved. The fact is that just to sit there and watch it happen and not do anything about that is criminal. At this particular point, there's opportunities to make a lot of money, and we are on top of it. This show has been on for almost 20 years now, and we've given some tremendous advice. We have an opportunity to start 2017 and make an awful lot of money. We need to get out of Canadian dollar-based investments and get them into conservative but profitable U.S.-based investments, and I can help you with that.
We are in a scenario based on what Macquarie is talking about, 65-cent Canadian dollar. And we had Jared Dillian. That was another story that we had last week, and I think it bears repeating. Jared Dillian, and he was somebody who came out last year, and we had talked about it. He said, get long the U.S. and short Canada. Troubles brewing in Canada. Canadian dollar will continue to drop. In fact, Canada facing major headwinds. Jared Dillian thinks the dollar could move to 160 to 170 to the U.S. dollar, and currently trading at about 132. So he thinks we're in a scenario now where in 2017, 160 to 170, and he believes the Canadian dollar is one of the best macro opportunities over the next couple of years to short. So here you have Macquarie coming out saying 65 cents on the Canadian dollar. Then you have a scenario where Dillian coming out saying 160, 170. Harold, time to short the Canadian dollar, get into the U.S. dollar as soon as possible. 2 minutes left here in our segment.
Yes, the thing is, we don't want you to short the Canadian dollar. It's way too risky, and most people don't know how to do that. What we do want you to do is to get into U.S. dollars so you can make that money. The fact is we don't want our clients and listeners taking unnecessary risk, and going into the futures market and then trading on the short term is exactly that, way too risky. We're much more conservative. We take a much more conservative route, but we'll certainly show you how to make the maximum return on your investment without getting into trouble. So, again, I'm very excited for 2017. Got a firm grasp on what the markets are doing. The trends are in. My clients are sitting in those trends right now, but it's not too late. You can still get involved and make a ton of money this year. So we want to hear from you. Let us help you get involved in the right markets at the right time.
The call is free, and anything you discuss with Harold is confidential. 1-800-432-1022, 1-800-432-1022. That's the number to call to speak personally and privately with Harold Siegel. His website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. And our featured diamond of the week is a beauty. It's a 1.21 carat cushion-cut fancy green diamond ring. You can see it online at rarecoloreddiamonds.com, rarecoloreddiamonds.com. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January the 5th, 2017. Our time is 9:08 Mountain. Our radio show runs normally Sunday afternoon, 3 until 4 on 630 CHED. Today we're on a half an hour early, and that is to make way for the Oilers pregame show, Oilers playing the Senators. Good luck to the Oilers playing the Senators. In a half an hour time, that's when we have the pregame show. Connect with Harold. It's very hard to retire in the financial world we find ourselves in today. It is so confusing. That's why we do our radio program. And so many people on a weekly basis phone and speak with Harold, personally and privately, and ask questions that they may have as a result of listening to the radio program. What does Bill C-15 mean for the average every Canadian who has money in banks, the Canadian investor out there? What are bank bail-ins, negative interest rates? What will the weak Canadian dollar do to a person's investments? What about a pullback in the housing market in Vancouver and Toronto? Cashless society, can't forget about that. The oil market. So many different things going on in the world today, and of course, there's going to be a President Trump who's going to be inaugurated here and sworn in very soon. Geopolitically, many, many questions that are being asked. That's why we do our radio program. That's why Harold is there to speak with you. If you would like to talk with him, the call is free, 1-800-432-1022. Connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com. It's a very confusing time, and Harold is there via the radio show, our newsletter, and obviously a phone to guide you through these perilous times and make money. Our featured diamond of the week is a 1.21 carat cushion-cut fancy green diamond ring. And this is a beauty. You can see it online, rarecoloreddiamonds.com, featured diamond of the week. And Harold, give us a little bit of a background on this diamond. It's a beautiful, beautiful ring.
Better believe it. The fact is that we're starting to show green diamonds because green diamonds are the next major trend in diamonds, and we feel, just like blue diamonds, that green diamonds are going to be one of the biggest returns on investments over the longer term, and that's why we're showing this particular diamond. It's really spectacular. First of all, most people have never, ever seen a green diamond. A green diamond comes from Central and South America, and the fact is that they are extremely, extremely rare. They only turn green because of uranium. So basically, most of the diamonds that will come out of the mine will be white. However, if uranium seeps into the ground, it will turn this diamond actually green. and it can and that will actually make the value of the diamond so extremely rare and so high, just like blue diamonds. Back in 2005, you could have bought a vivid blue diamond at auction for approximately $500,000 a carat, or $200,000 a carat. Over the last 10 years to 12 years, blue diamonds, vivid blues that are selling at auction, went all the way up to over $4 to $5 million a carat. Blue diamonds have been the biggest return on investment of any asset over time that we have ever seen. And we believe that the next major trend is actually going to be in green diamonds, which is why we're starting to mine them and cut and polish them. We actually just purchased one of the largest, if not the largest, green rough diamond ever in existence, and that diamond will be one of the rarest diamonds ever. So green diamonds turn green because of uranium. Blue diamonds turn blue because of boron. So we feel that green diamonds are going to skyrocket in price, and we want to make certain that our clients have the opportunity to invest in them. So this particular diamond weighs over a carat. It weighs 1.21 carats. It's a cushion cut, which is a very popular cut. 85% of all diamonds are cut in either a radiant or a cushion cut, and a cushion cut is just basically a square cut diamond with rounded edges. Again, the color is a fancy green, and it is such a beautiful diamond that we put it into a setting primarily because, again, the diamond has got to be viewed. It's just absolutely spectacular. So we're very excited about what's going to happen in the green diamond market. In 2016, we saw a vivid green diamond known as the Aurora diamond sell for the highest price that a green diamond has ever sold for. It was a 5-carat diamond that sold for $15 million. So that particular diamond sold for $3 million a carat. We feel that over the next 10 years, that green diamonds will get up to $4 to $5 million a carat, and we're talking about the vivid greens, the highest saturation of color. So, again, we're just ecstatic with what's happening in the diamond market, and this particular diamond is very, very special. It's an investment quality diamond that will never, ever decline in value, will only go up in value, and it's also a diamond that can be sold in another currency. It's priced right now in U.S. dollars because we're pricing it in U.S. dollars. However, eventually down the road, if the British pound or the euro or the Chinese yuan or whatever the currency, which is the stronger currency, we can always sell that diamond in that currency. So we love this featured diamond. We showed it in a magnificent ring setting. It's an asset that will never, ever decline in value and could make you a fortune over time. The thing you should understand also about rare color diamonds is that they're not a short-term investment. You don't buy them for just a couple years. You know, those that invest in retirement savings plans, for example, understand a long-term investment, and that's where colored diamonds are. I mentioned many times about a $50,000 5-carat pink that was bought 50 years ago is now worth $5 million. I know of no other investments that give those type of returns with the safety that you have in the rare color diamond market. So where we do love what's happened in blue diamonds, we're very excited about the next major bull market, which will be in greens and oranges. However, there is a phenomenon that is happening at this particular point, and that phenomenon is pink diamonds. The fact is that 95% of pink diamonds come from one mine. It comes from the Argyle mine in Western Australia. That mine has been in existence since 1986. It was the largest producing diamond mine in the world, producing over 30 million carats of diamonds a year, but hardly any of those were investment quality diamonds. The majority of the 30 million carats were white industrial diamonds that are used to cut other diamonds. However, out of those 30 million carats of white industrial diamonds comes the most rare diamonds, which are pink diamonds. The fact is that the Argyle mine produces 95% of the pink diamonds in the world, and that mine is going to close before 2020, which means that all of a sudden, this long-term investment is no longer long-term. It's a shorter-term investment because in 3 years, the Argyle mine will close, and we anticipate that the price of these diamonds will literally skyrocket in price. We're very excited about our clients that own those diamonds. You do not have to be a multimillionaire to invest in Argyle pink diamonds. In fact, you can get involved starting in the $30,000, $40,000, $50,000 range, and we do believe that these assets will turn out to be one of the best, if not the best investment that you've ever made. So, again, we've got some opportunities in pink diamonds because the mine that produces them is going to close and there will be no more. And we also have a phenomenal opportunity in green diamonds that we believe is the next blues that will skyrocket in price and we believe will make our clients a fortune of money.
Speak with Harold Siegel. The telephone number, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. One of the things that we wanted to pass along, and we have two articles. They were really, really, really well done. And it's a synopsis of the year in auctions. Anthony DeMarco did the top jewelry auction sales for 2016. And here is a rundown. The Oppenheimer Blue was the top lot sold. It was a 14.62 karat fancy vivid blue rectangular cut diamond, fetching a world record price for any jewel sold at auction, more than $58 million at Christie's Geneva Magnificent Jewel Sale in May. Then we had the De Beers Millennium Blue, a 10.10 karat fancy vivid blue sold for more than $32 million at Sotheby's Magnificent Jewels and Jadeite Sale in April. The Unique Pink, a 15.38 karat pear-shaped fancy vivid pink diamond, sold for the world auction record price for any fancy vivid pink diamond, bringing in more than $31.5 million at Sotheby's, and that was Geneva's Magnificent Jewels and Noble Sale in May. The Cullinan Dream, a 24.18 karat mixed cut fancy intense blue diamond, sold for more than $25.3 million. And it is the largest fancy intense blue diamond ever offered at auction. It was sold at Christie's New York Magnificent Jewels and Cullinan Dream Sale in May. A 17.07 karat fancy intense pink diamond with a step cut sold for more than $20.7 million at Sotheby's Geneva Magnificent Jewels and Noble Jewels Sale in November. There was a 9.14 karat fancy vivid pink pear-shaped diamond. It sold for more than $18 million at Christie's Geneva Magnificent Jewel Sale in November. There was they call it a mirror of love. And these are earrings, just big, chunky, gorgeous white diamond earrings, a pair, 52.55 and 50.47 karat pear-shaped D-color, flawless type 2A diamond earrings, sold for nearly $17.7 million at Christie's Geneva Magnificent Jewel Sale in November. They are the world's largest perfect pear-shaped color. Actually, they are the pear-shaped diamond drops ever to be offered at auction. And then we round things up. A 7.32 karat pear-shaped fancy vivid blue diamond sold for more than $17 million at Sotheby's Geneva Magnificent Jewels and Noble Jewel Sale in May. The sky blue diamond, an 8-carat fancy vivid blue diamond mounted on a diamond ring created by Cartier, sold for $17 million at Sotheby's Magnificent Jewels and Noble Jewel Sale in November. And then finally, the big one, this is something that we talked about a lot in 2016, the Aurora Green. It was a 5-carat rectangular cut, fancy vivid green diamond with a circular cut pink diamond surround, sold for more than $16.8 million at Christie's Hong Kong Magnificent Jewel Sale in May. There's a complete rundown of the top auction sales for 2016. we have another article. It is in our free weekly newsletter. I really encourage you to get our newsletter from Harold, read it over. It goes through all the colors specifically. It talks about yellow and blues and greens and pinks, all the different colors that can be auctioned off. It lists them off. It's the colored diamond hammer prices for 2016. Check it out in our free weekly newsletter. Get that information from Harold, 1-800-432-1022. The website, rarecoloreddiamonds.com. But Harold, it was an outstanding year for diamonds in 2016.
You better believe it. I mean, the prices that we saw, again, especially on the blue diamonds, were outstanding. Just absolutely outstanding. I think rare colored diamonds outperformed at auction any other asset class, over art, over classic cars, over anything, and that's a great sign. You know, the other thing about the auctions is that they tend to concentrate on giving us news about the obviously, you know, outlandish diamonds that sell for multi-millions of dollars, because that's what people really love to hear. But if you look deeper into those auctions, you'll find that it was the lower and the medium priced diamonds that actually had the biggest returns. So very excited about that. The fact is that most of my clients are hardworking, everyday Canadians that just want to do better than putting your money in the bank and getting ripped off there, or going into the stock market and losing your money, or into a retirement savings plan where nobody's made money for a decade. The fact is there are alternative assets that we just want you to open up your mind to. Take a look at them, consider them, and then make a decision based on the facts and figures as opposed to emotion or anything like that. Most people that trade stocks lose. Most people that trade commodities lose. In fact, the numbers are overwhelming. Over 90% of the people that trade in those two areas lose their money. So why in the world would we recommend that to our clients that we love and want to see do well? So again, at this point, the world has changed investment-wise. Most people do not make money when they invest. Our clients are in alternative assets. We pay in American dollars, and our investments pay over 25% a year return, not including the dollar. So add that to it. Some of our returns are much higher than that. If you're not doing that well and not getting the returns that we're talking about on the show, you need to pick up the phone and give me a call. I'll spend as much time with you as you need to understand what we're doing here. But again, there's an opportunity to make a lot of money these next few years in the spread between the Canadian and American dollar, and we're right on top of that. We're the ones that recommended to you 5 years ago before it even happened.
Speak with Harold. The telephone number, it's a free call, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. One of the more interesting stories that happened in 2016 was one that caught the attention of many people due to the name associated with the diamond, and that was Shirley Temple. It was a 9.54 carat fancy deep blue diamond ring that the late child star who rose to fame after starring in Bright Eyes, Curly Top, and Heidi, received from her father in early 1940. The ring, which Sotheby's, their specialist, said was a very rare color, was given to Temple by her dad around her 12th birthday and the time of the premiere of her film The Bluebird. The stunner remained part of Templeton's collection, Shirley Temple's collection, until she passed away in 2014. Not only was the ring detailed in a great cut and cushion shape with round quarters, but the blue was just absolutely gorgeous. Now, to give you an idea, this diamond ring was purchased for $7,200 back in 1940. The ring would roughly cost about $122,000 in today's dollars, according to Sotheby's. Now, it was up for auction. The estimate on it was around 25 to 30 million. It did not sell. We were told it did sell privately afterwards for over $25 million. So obviously, Harold, that was one of the more unique stories that we had. A ring from 1940 purchased for Shirley Temple for around $7,200. Eventually, all those years later, selling in her estate for $25 million plus. Obviously, that's not going to happen with every diamond, but it's a very unique and interesting story about this very interesting and exciting colored diamond market, something that no other investment has.
Better believe it. I mean, just think about it. Most people that buy diamonds don't need to sell them. You know, they're going to keep them in the family estate, and they're going to turn them over to their kids and grandkids when the time is right to do so. That's how these diamonds take on a life of their own, and how they get to those to that asset price. So back in 1940, the diamond was bought for just over $7,000, and it was sold in 2016. So obviously, that's 76 years. It took that diamond to go from $7,100 to $25 million. So the fact is that it stayed with Shirley Temple for all that period of time. Now, the fact is that you put these diamonds away. It doesn't matter how much money you have. If you don't need the money when for retirement type of thing, again, you're going to want to help the kids and the grandkids and pass assets onto them. You know, real estate, stocks, cash, things like that. But a diamond, the longer you hold it, the more and more and more it will go up in value. I know that for my grandchildren, I've got 4 of them, they all have diamonds put away for their future. They don't know it, but they have diamonds put away. They don't have any stocks. I haven't given them anything that I felt that would lose money for them. I'm comfortable with the asset class. I'm comfortable with putting away an investment for a long period of time, and even assets that may have cost me $10,000 when I bought them, or $20,000 when I bought them originally, you know, over the next 20 or 30 years when they're ready to make their way in this world, that asset will be worth 6 figures. So that's the route that I've gone with my children and grandchildren. Always put away the type of assets that could build wealth for the family. And rare colored diamonds have been proven to do that. And all you have to do is get the newsletter this week, look at the results that Randy and I just spoke about, and you'll understand exactly what I'm talking about. The fact is, it's very, very difficult to build wealth when you put most of your money into risky stocks, commodities, and those type of investments. The major money is made over the long term, and that's what diamonds will give you.
Featured diamond of the week is a 1.21 carat cushion cut fancy green diamond. It is absolutely gorgeous. It's a beautiful ring. You can see it online. rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. We have video of the diamond there. Harold, we have approximately 30 seconds left. Second show of 2017, and at this point, we're waiting for the presidential, obviously, new president in the United States, and then things should get very interesting.
You bet. It's going to be a very interesting year, but again, no matter what happens, there's trends in the market that are in place at this particular point. It's something that we've been very good at for the last 30 years. We're saying to buy the U.S. dollar and get out of the Canadian, and I can show you how to do that. We anticipate that our clients will make a fortune in 2017.
Speak personally and privately with Harold Siegel, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Ask Harold about those articles. We'll be happy to send them out to you about Macquarie saying the Canadian dollar going to 65 cents. Jerry Dillian talking about the Canadian dollar obviously being in a position 160, 170. That's something, these are articles you must read. And take a look at our featured diamond of the week at rarecoloreddiamonds.com, that beautiful green ring. rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.